Hello learners, welcome to Commerce Diction. How are you all? Today I will start a series on income tax subject for your semester which will be beneficial to you. So please subscribe my channel to get more videos, and if you like my video please do like, share with your friends. Now let's begin our first chapter, Basic Concepts on Tax. Tax is an important source of revenue for the government at center as well as at state. It means the central government and state government earn income by imposing tax on a person's income or on goods and services. The basic objective of taxation is to remove the gap between rich and poor by imposing tax on high income earners and improving the general economic condition of people. It means whenever we impose tax on the high income earners, we extract some money income from them, and this money income is now spent on some schemes of the government so that it will be beneficial for the poorer sections of the society. Now this reduces the inequalities or imbalance between the richer section and poorer section of the society to some extent, and in this way our general economic conditions of the country, or we can say of the people, improves. Okay. Now what is tax? It is a compulsory financial charge or some other type of levy imposed on taxpayer by a government in order to fund government spending and various public expenditure. So tax is to be paid by everyone, so it is compulsory, and it is a financial charge because it is imposed or charged on money income, and it can be some other type of levy, means it can be a surcharge or cess which comes under the tax, and these are imposed on taxpayer, means the person who pays the tax. It can be an individual or a legal entity like company, firm. Okay, so these are paid by the taxpayer and imposed by the government in order to collect money from them and spend on various sectors of the government department, and this helps in the development of the country. Now what are the government spending and public expenditure? This includes construction of roads, dams, bridges, government school, colleges, hospitals, funding defense, public transportation, payment of salary, pension, waste management, and many more. Now let's see what are the types of taxes imposed by the government. First is the direct tax, second is the indirect tax. Now what is direct tax? Direct tax are imposed on person's income. These are charged on person concerned, and burden is borne by the person on whom it is imposed. It means if a person earn income like salary, then if the government imposes a tax of certain percentage on the person's income, that is the salary, then that person will have to pay the tax directly to the government without any third party. That is why it is called direct tax. Similarly, if certain percentage of tax is imposed on the company's profit, then the company will have to pay that corporate tax to the government directly without any third party. That is why it is also called direct tax. Now let's see some other examples of direct tax. For example, income tax, wealth tax, which is now abolished in budget 2015 and replaced with surcharge, that is an additional tax. Surcharge is an additional tax, that is tax on tax. Okay. Now if a person earns a higher level of income above the threshold limit notified by the government, that person will have to pay surcharge. It can be a company, or it can be an individual, or it can be an HUF, or it can also be a partnership firm. Okay. Now let's understand some other types of income tax, such as corporate tax, tax paid by company on revenues they earn, gift tax levied on gift given by people other than family or relatives, Capital gain tax is a tax that is paid on benefit or gain arising from capital assets such as investment in stock market and real estate. Capital gain tax means the tax which is paid on gain arising from sale of any capital assets such as sale of shares, debentures or any other investment. Okay. And property tax is a tax paid by the landowner or the property owner, that is the house owner, to the municipal corporation of the area. Now, what is indirect tax? These are tax imposed on goods and services and not on income of person. It is generally imposed or levied on supplier or manufacturer who then passes it to the final consumer. It means in indirect tax, the tax is imposed on the goods and services that are consumed by the consumer and not on the income of a person. So, whenever a consumer purchases any goods, he pays some tax which is not known to him. That is why it is called indirect tax. But he or she generally pays the tax while purchasing that commodity. It is imposed or levied on supplier or goods or manufacturer or goods of goods. It means the tax is imposed on the manufacturer, so the manufacturer or the supplier pays the tax, but it is collected from the consumer who purchases the goods. That is why the burden is on the consumer who pays the tax, or we can say who purchases the goods indirectly pays the tax. Example, GST, custom duty, service tax, etc. Okay. Now let us understand the difference between direct tax and indirect tax through this picture. Here you can see that both the arrows are towards the girl in case of direct tax, but in indirect tax one arrow is towards the girl and one arrow is towards the shopkeeper. Now let's see. Here in direct tax, one arrow says the ultimate burden of tax payment is with that girl and the responsibility to pay tax is also with that girl. It means that girl will pay the tax, so the burden is with that girl, and the responsibility to pay tax is also is with that person, because that girl will pay the tax directly to the government. That is why it is called direct tax. But in case of indirect tax, you can see that ultimate burden of tax payment is with the purchaser, that is the person who consumes the good or who purchases the goods pays the tax indirectly through purchase of goods, but the responsibility to pay tax to the government lies with the shopkeeper. Example C, in case of direct tax, first is the income tax. When you earn income, you are responsible for tax payment and you also have the burden, because on earning income we have to pay the tax directly to the government. That is why it is called direct tax. But in case of indirect tax like GST, when you buy any stuff, the shopkeeper is responsible for tax payment, but he can collect it from you. It means whenever we buys any good, we indirectly pays tax to the government. That is why it is called indirect tax.